Alrighty, what's going on, ladies and gentlemen? Welcome back to the channel for another weekly update. I hope everybody had a lovely week. Hope everybody's having a lovely weekend, and I hope everybody is ready to kill the upcoming week because, quite frankly, there's a lot of money to be made. And yeah, I wish the best for all of us for this week, and obviously always. But yeah, with that being said, let's get right into the charts. We're going to start with the weekly charts, then we're going to dive into the daily, then the 4 hour, and the 1 hour, and we will get on our way. I got a few things to point out, and then we're going to talk about our girl Mara at the end of the video, so stay tuned for that. All right, so starting with the weekly charts, you can clearly see we did break out from this rising wedge here. We stopped right here at the last point of support. You can clearly see that represented by the daily time frame over there. But yeah, you do have your oscillators hinged down from not quite in overbought territory on your CCI there, but then again, we also got the same exact setup last time we came here and tapped that trend line there. And when we fell here for a whopping, I want to say that was like 22%, something like that. Yeah, 21.5% right there. Look at where your CCI was there, and look where your stochastic was in your RSI. We were right here in this middle range. Now, the one thing that did stay consistent among the oscillators was your RSI coming right here, peaking over 50, and then turning down. And each one of those times, we came down, we hit a trend line right there, and we fell a whopping 15 to 20% each and every time. But that I mean only twice so far, but I do think we are about to do the same exact thing here. We have the same exact setup, and I give it a very low chance that we end up getting good news from the Fed, and we end up rallying back up, considering we have DIA looking like this. And you have VIX ready to pop off. VIX is all the way down here, and as I did point out a while back, VIX's RSI didn't hit I think it was 2850 we got somewhere over here. I don't remember where it was. Maybe it was over here. Maybe it was right there. Yeah, 2823. It didn't hit that level since 2004. It's quite some time. And then the weekly RSI also, I don't remember which year, but yeah, it hasn't been this low in quite some time. We can actually just quickly look at that. We could just put a marker right there. We can just see when was the last time. All right, all the way back here in 2012. So we haven't been down here on our RSI on the VIX since 2012 on the weekly time frame. So I mean, things are really queued up to move in, groove. We did break one trend line right here. I did not put a target on the board just because it's the VIX and tends to just have these cycles of going up and down instead of just continuously going down or continuously going up. But as you can see, we did hold this broader trend line here, this longer term trend line that spans all the way back from 2020 when we had this first initial breakout here. These periods over 40, they do represent just crises, bottoms forming in the market. I do think we're going to get one. We're definitely going to get one probably throughout 2023, but I'm not sure if it's going to be this time. But what I do know is we are going to be popping off of Mr. VIX, and that is going to make SPX and SPY and QQQ, the NASDAQ, and all the indices, they're all going to be cycling back down, likely for new lows, except I am very open to the possibility that DIA will have a either higher high or it will come down and it will double bottom here just because it's the only indice that went up and made the higher high. Like you look at QQ, didn't happen, not even close. You look at SPY, not even close. All right, you look at IWM, not even close again. IWM clean trend line break right there. We should have put a target on the board, but we didn't. But either way, getting back to the weekly time frame, you can see every indice still has its oscillators ready to go all the way back down. You're getting your sell signal here on your weekly CCI and DIA. IWM, you have your oscillators hinged down. All stochastics are hinged down and crossing down from the overbought territory, which leads me to believe, hey guys, we're not going to be getting good news from Mr. Powell. All right, we got CPI on Tuesday. Monday we don't have anything, but we got CPI on Tuesday, and then we have FOMC on Wednesday. We all can see the weekly setup right now. It's clear as day. Anybody who doesn't even know how to look at charts and read a chart, anybody could look at the chart, but anybody who doesn't know how to look at the data that we're seeing in front of us right here, even they can tell, like, hey guys, it's pretty simple. As long as you can like reference back here, like look at what happened last time we had this exact same setup. Well, yeah, we fell. We had the golden pocket, the 200 MA here. Yeah, let's just go over the daily chart on SPY. We'll start off with that one for the daily charts. Guys, we rejected off for 200 MA. The bear market trend line, the descending trend line we had that was marking this whole bear market. We're inside the golden pocket. We had a gap fill right here at 408. I think it was like we'll actually look right here. It was 408.46. All right, so we rejected off of that. And we have this rising wedge here. Like, these are very bearish factors that were also with us back over here. We had a rising wedge over here, I believe, as well. It was right there. Was this it? I know we had targets. Yeah, right there. All right, so we had a rising wedge that we broke out back here with an island gap. Or is that an island? No, that's not an island gap. Island gap is where you gap up and then get back down, and it creates a little island just floating in the sky. But either way, we had like almost the same exact conditions over here. We didn't have a gap to reject off of or anything like that, but we came back up, had our 200 MA here. We had the trend line there. We had the golden pocket. If you guys just want to see with your own eyes here, instead of me just telling you guys, yeah, we literally came back up and we rejected off of this golden pocket right here. So we can now delete that. We had this golden pocket, this golden pocket. That's actually the same exact thing that we had going on over here. If you guys just want to see real quick, we can make that a little better right there. We also rejected here off of our golden pocket. So, I mean, I'm just saying, guys, this is a very clear as day setup. It's been here since we were up here. We called the exact top. We didn't we were open to not calling the exact top, but I told you guys it's very likely that we were going to be topping there at that trend line. And I called that one out when we were all the way probably somewhere over in this range here. It was like 1 to 2 weeks before I started preparing you guys for that setup. Like, hey guys, the put setup is like the mother of all put setups is coming. All right, and people already had time to take profits over here. All right, I took profits a day early. I missed out on this big daily red candle right there. But luckily, like, hey, no, I'm fine with missing a little of the profits there because, guys, we're still at the top. All right, even though you do have your oscillators all the way down at oversold territory, you can see we can stay down here for quite some time and form these bullish divergences that will eventually end up giving us that boost upward that we need. All right, to show like, hey, someone has their foot on the lion's neck or the tiger's neck, and right when they let it up, going to explode upwards. All right. And I do think that is going to be the case. We can look at the monthly charts. And I think we are setting up for a bullish divergence here on SPY, QQQ, DIA, especially DIA, actually, if we go down and make this new low. IWM, it has the same, it already has a, does it have a bullish? Yeah, the IWM already has a, bullish divergence right there. I mean, either way, guys, we're just, the setup is in. All right, DIA, we have this, not DIA, DXY, we have this bearish divergence right here, which we also have to look at the weekly chart here on DXY. We're bottoming here on DXY as well, and I'm going to show you guys the daily chart in a sec. So not only are we crossing up on our stochastic on the weekly time frame here, which, guys, from the oversold territory, this was what marked that bottom there. This is what marked that bottom there. It's what, I mean, we did fall for quite some time here, actually, now that I think about it. So over here, this is where you would have seen that work out. But now we come over here to the daily time frame, and you got something different. And keep in mind, this is all happening as we have what we got going on SPY QQ on the indices, all right, with the VIX. VIX is bottoming, while DXY is also bottoming here. That's not good, all right? The market goes down when DXY goes up. That's just how the market works. All right, that's how everything works. If the dollar goes up, equities just have to come down. The VIX, guys, it's the same thing. All right, the VIX moves opposite to the S&P 500. It goes up when puts are being bought. It goes down when calls are being bought. And I said that wrong. Well, I said it right, but I failed to mention this. All right, so the VIX goes up when puts are being bought and calls are being sold. VIX goes down when calls are being bought and puts are being sold. So that's why it moves opposite to directly opposite to the to SPX. And the only times it doesn't move opposite to SPX, and if it moves congruently, gives us these buy and sell signals with an 85% probability. I found that on the internet somewhere, and I stuck with it, and it's been working for me ever since. And I see like a bunch of people making, like, not only people in videos, but people on Twitter and stuff. They don't give the 85% probability thing out there. So I guess maybe I'll stop saying that, because you know what? I don't even know what gave it that 85% probability, but I do know it's a high chance that, hey, those signals exist. Like if you have VIX green with SPX green, if they close out that way, yeah, 85% probability within the next 2 trading sessions that you have a down day. If it closes red and red, then you have an 85% probability that you have an up day on the SP 500 within the next 2 trading sessions. So those are signals that have continuously worked out for me. They've just been a bigger part of my picture. So, I mean, I should actually do some more research on those because I either got them from the internet or one of my mentors gave them to me over the past year or two. So I got to look into that one. But either way, they exist. All right, they're there. And guys, we're seeing VIX bottom, we're seeing DXY bottom. We got a bullish divergence here on DXY's daily time frame. We have a bullish divergence here on VIX's time frame that allowed us to get that breakout from the falling wedge. We're now consolidating up here, but I want to point out that VIX's stochastic still has some room to go before reaching overbought territory. And as you see right here, when we started exploding up here, right? We broke out from this wedge, which was, I'll just sloppily draw it right there. It's that wedge right there. And you broke out, but you started stalling out. You had your gap up, and then you started stalling out right when your stochastic started reaching that overbought territory here. On your CCI did the same exact thing, and then you went down for a few days. So this would kind of be pretty much exactly how I think this is going to go. I think we're going to have one more day where VIX has a spike, but I think VIX is going to form another doji candlestick. We have like 2 in a row right here. Is that 3 in a row? We kind of had 3 doji candlesticks in a row. So just indecision going on the VIX with the options market. We're just confused before FOMC, and that makes perfect sense, all right? Because like I said, VIX is directly correlated to SPX, the S&P 500's option market, the derivative market. So and you could see people just big money just doesn't know what is going to be taking place, and that's why I advise guys like, hey guys, if you know how to do it, take the strangle, because the strangle ensures that, hey, you'll make money either way we go. And I will be doing a new strangle on Tuesday right before close on TQQQ for Friday's expiration, because FOMC will be bringing us big in one way or the other. I think there's probably going to be the knee-jerk reaction to the upside like we usually have before it sends us down. So, and it doesn't have to send us down. It has sent us up before. But either way, it typically marks, like, it doesn't mark tops or bottoms, but it typically is it'll determine where we're moving between then and the next FOMC meeting, or then and the next big news catalyst. And just saying, guys, the jobs report was already hot. All right, we already had that, came in. That's like a 25-30% beat right there, or like it came in 30% hotter than expected. 260K jobs versus 200K jobs expected. That's a lot. All right, so that's like right off the bat, that is not good. Okay, that means like the possibility of that wage price spiral, it's still in the air right now. And the fact that, like, I don't think an unemployment is, I could be wrong on this. Maybe I'm just having a forgetful memory, but yeah, unemployment also isn't not skyrocketing. That's what you want. And like, that's also going, like, a recession is kind of guaranteed to happen at this point. I've never actually lived through one. I think we're kind of living through one right now. We had the technical definition of recession 2 quarters ago. So I think we're maybe, now I could say I'm living in one. But either way, there is going to be one that everyone acknowledges in the upcoming year. In my personal opinion, we already had the yield curve invert. That inverted a while ago, and if I'm remembering things correctly, I think it's the 10 to 30 gives a 12 to 18 month period where we're going to have we're going to have a recession within 12 to 18 months. And I'm pretty sure it started inverting at the beginning of this year, pretty harshly. So I think it is going to be coming. But I do want to say I want to remind you guys, like, hey, we can't buy into these narratives that are going on, because guys, the charts are going to tell us exactly what we need to know. We just had PPI come out. I told you guys that, like, hey, the charts were suggesting we're not going to be falling off of them, or we're going to be trading somewhat flat, or we're going to be rising off it. And if we did fall off of them, we weren't going to be falling a lot off of them, because the oscillators were just showing that, hey, we don't, like, we're already down here. We weren't going to fall a lot. And if we did fall, it would probably give us that bullish divergence that would then be an indicator that we are going to be going up. And yeah, we had a hot PPI report, and we still ended up having this day right here. Now, I do see we sold off going into the end of the day. I get that. But all in all, you could see that, guys, the chart's got her back is what I'm getting at. Okay, this is why I refuse to really prepare for like news catalysts. I know will be moving the market, like CPI reports and FOMCs. Yes, I will be playing strangles because I fully acknowledge I don't have a crystal ball. I don't want to gamble on these events. I just want a guaranteed money printer that works for me like once or twice every month, guaranteed. All right, but obviously the skill set is a money printer as well. So that'll be working year round, and I'll likely be able to any amount of money for the rest of my life. Hey, you wanna double that money? You get that opportunity every once or twice a month for the rest of your life, as long as I don't let the skill set diminish and I just keep strengthening it. It'll only get stronger. So, that's my plan there. Oh look, you had the short day here. You could like see it. It's smaller than these days. But either way, guys, we are in the same scenario now before CPI. All right, we have CPI on Tuesday, so we do have oscillators on the smaller time frames hinged down. So I do want to point that out. You are hinged down, and on VIX, I do believe, yeah, you got room to go up. It does look like VIX actually, with how it currently looks, it looks like it very easily could do that. And we could end up doing that and forming that bearish divergence here on VIX's 4-hour time frame. Often we do see that these are marked, the bottoms are marked with these 4-hour bullish divergences, and the tops on VIX are marked with the 4-hour bearish divergences. You can see right here we have a bullish divergence right there. You see the top, we did not have any, we didn't have a bearish divergence there. But if you see this major top right here, we very clearly did have that going on there. You had the same thing over here where you made this over there. Either way, my point is clear. All right. The divergences matter, and like we are like they don't matter, but they matter because people are probably all looking at them. And what they mean on the CCI is like, hey, out of all points in history on this specific ticker, all right, with that specific amount of buying and selling pressure, and this is my interpretation of the CCI, which is why I give it the weight that I do in my technical analysis. But yeah, throughout all points in history, with that specific amount of buying and selling pressure, this is what would be happening to the charts. You clearly see we're going down here, and we made a higher high there. Well, that's because hey, someone is bringing SPY down. It like normally shouldn't be going down this much, but that's why I do think if we do fall on Monday, which I think there's a solid shot, but either way, I'm still on both sides of the strangle, and I still do have my I bought half of the SPY 390 puts that I wanted for January 20. So those are going to be making a little money. Maybe I will sell off either all of those. Well, I don't want to sell off all of them because like either I'm going to have plenty of money to buy up there, and also I am going to be selling the put side of the strangle anyway, so that's going to be bringing in money from this move. So maybe I'll sell a few of them, but all in all, I probably will just leave them and add on the rise that we likely get going into FOMC. And I say that because, hey, we can fall here, but look at where we are. We are so close to this oversold territory already. And like, yeah, we can grind down here, but it's going to form a bullish divergence. We get a bullish divergence, guys, going into FOMC. Like, I have no choice but to listen to the charts. Like, either way, that's why I want the strangle, because I have no crystal ball, but I know these events will bring volatility. And if you have a strangle, say, like, if I see that we have the chart set up to rally into FOMC, maybe I'll even like get a strangle with, yes, this Friday's expiration, because yes, volatility is likely to come and bring one of the sides way in the money. And there you go. You get 100 to 150% gain on the same day on your strangle. But also, I'll have one for next Friday's expiration too. Like not this Friday, but the following Friday's expiration. Because maybe we get if we go to the upside, guys, we all know what happens. If we go to the upside, it's gonna be met with this resistance. We're very likely gonna be rejected again. And if we rally, that's right around like 404. Let's just look at the Fibonacci level. I'm going to be starting to use these fibs, guys. I'm just letting you know, because I very clearly do see they are respected, guys. They are respected. The golden pocket would be right here in the zone, and look at that. If we do end up rallying up, we're going to be rallying up, and yeah, we would be hitting resistance in the golden pocket, right at this trend line. We would come up, and we would like say we fall on this day, but then we have these days. So we rally into FOMC. We have like mega days, like one of these. Maybe we have a day or two of like something like, just a big day that brings us up for that back test here on the what's it called, the rising wedge we got here. So now, boom, you come down to support, come back up to support, and boom, you get enough strength to come down and break that support and get us all the way to our target down here. And that honestly is, guys, I think that is the most likely scenario. I think we might continue falling on Monday. We might form a bullish divergence here on your 4-hour CCIs. All right. QQQ, yes, you have the same exact thing. You could fall like $3 or $4, and I don't think your thing would fall off a cliff here. Maybe if you gap down, I don't know. Maybe we will have a gap down on Monday. I have no idea, guys. I have absolutely no idea. But I'm just saying, guys, you are already down bad here on your indices, on your 4-hour and daily oscillators. Like, look at IWM's daily oscillators. Look at you. Look at you. You're already down here. I don't think you're going to be staying down here for a while. I think you're going to have a scenario where you, it's just a little thing like this. We go up before the big drop, or we have like a day or two like this, and then we have this big drop. I don't know what caused it that day. Maybe this was FOMC back over there. I know this was, I think this was CPI over here that did that. But either way, guys, like this is what I expect to happen. I think we're going to have this little grind. We're going to maybe continue downward for one more day, form the bullish diverges, maybe have that little pop before FOMC. Maybe it's a bigger pop. Maybe we get what I just described, us coming all the way back up to back test the rising wedge, come back into the golden pocket of this move, which is around here. Also, maybe we come back up and back test the 200 MA. So we popped above it, got a fakey right there. We fake this out, come back and test it again, and then reject the second time. Guys, ultimate bearish signal right there. I would be going so heavy on puts. Like, I'm serious, guys. I would put like most of my account in data puts. Or I know there's SPX. There's like the short version. I don't know what it's called, but there's the short version of SPX. Like if we get that entry, yeah, I probably would just go all in on shorts. They're not all in on shorts because I recommend like not doing that. But the SPX, whatever it's SPXS, we'll just call it SPX short. It probably is SPXS. Let's actually see if that's a thing. XPSS. Is this it? It looks like it is it. Yeah, I think this is it. Either way, I would go very heavy on the short side is what I'm getting at. Now, the last thing I want to touch on, now that we know what is likely taking place for FOMC, and keep in mind, guys, these videos are going to be a little more detailed, a little longer, because they are the weekly updates, right? I'm preparing you guys for, and myself, I'm preparing myself too. I always discount that. That is, I'm honestly the person who gains the most out of making these videos, and it's because I get to pretty much further my skill set. I get another chart to look at, a different chart to look at, which means I have more reps, different reps under my belt, and that's really what I care about. All right, and I do want to point out we still do have this, thingamabobber right there, and maybe it's a complex. Like I think with if you have two shoulders like that, it's a complex head and shoulders pattern. So one head, and then maybe we have that. I don't think we're going to have a complex head and shoulders pattern, though. I think it's just going to be a normal head and shoulders like this. You have left shoulder, you have right shoulder that is going to be forming. Oh, actually, no, guys. I see it right now, actually. I literally see it so perfectly. So you have one shoulder, two left shoulder. You have your head. You have this. We're going to go down on Monday, have that little pop up for FOMC, go down. And boom, you have a pattern that supports. So not only do you have like all other technicals, besides like I will say your daily charts, your daily oscillators all the way down here. So even though the weekly time frame is suggesting, hey, we're just at the beginning of this, I still do believe we are going to see a little pop before. It makes sense to me. We at least have to get these 4-hour oscillators up to something like this. Like over here was Wednesday, November 30th. Come over here. What was Wednesday, November 30th? See, like we got that pop, and then it set the way for a drop. All right, and I think that is going to come for FOMC. I think it's going to come back up. We're going to get that second shoulder. We're going to form the complex head and shoulders on QQQ on the NASDAQ, and then we're going to have that catalyst to come down and violently break that and go like that. All right, and I think we're going to come down and hit that gap fill, which is also the target on Mr. SPY. All right, let's delete all that. And all right, so the last thing we want to look at, and actually before we look at that, I'm going to show you guys what the 9-day VIX future is showing us, guys. It is showing us, we're going to look at the weekly chart here. So we're just going to compare the two. So we're going to actually bring VIX down there. So look at VIX, all right? So you had this bottoming candle right here. All right, you had that candle after that. All right, you had your bottoming candle right here. And then you had that candle after that. So that would be this candle, and then this next candle, I think this is what the market, if I'm reading this right, which I think that there's only one way to read it, and it's this. I think the market is expecting this week for VIX to skyrocket. Another, what was this? What was this? 47%? No, no way. I mean, maybe. I don't know. Maybe we do rocket up 40%. I have no idea. That would be pretty cool. It would be very, very freaking cool. VIX ran 30 to 40%. But again, this is what I'm saying. Like, guys, everything is set up for FOMC is it's set up. All right. It's set up for VIX to rocket into FOMC and the indices to drop in FOMC. But because I don't have that crystal ball, I will be playing that strangle I just spoke to you guys about, because like I still want to make money off of this event. And like after we get confirmation of a move, like say we get a move up off FOMC, I'm in the strangle, I get to sell the call side, and then boom, I also get to load the absolute boat on puts. That's the best possible case scenario, but I still think we're going to drop on FOMC. Because yeah, and that could come off of the rate hike, or it could come off of Jerome's comments that come, I believe, at 2 or 2:30 p.m. Eastern Standard Time that day. So that will be a thing. Now, the last thing I want to look at is Mr. Mara, all right, or Miss Mara, the lovely Mara. I want to point out we do have a bullish divergence occurring right now on the weekly CCI. I will be wait, do we? 207 over there. We have 195. So we do have a weekly bullish divergence occurring. I will be starting to load the boat. I'm gonna put now. Here's my plan for Mara. All right. I'm not gonna be comfortable until I think the market, the indices at bottom. I'm not gonna be comfortable going like almost all in on Mara, or not even almost all in. But let's say my net worth at the time is $60,000. I promise you guys I'll be putting $30,000 on Mara if it stays down in this zone. That's, guys, that is easy money right there. You don't even need to risk like, time value on options at that point. Now I will be obviously using a lot of my money for making money off the massive short squeeze that I just told you guys about in this video, which I've been mentioning, guys. I do think we are going to get that short squeeze. I just think the weekly, well, not think, the weekly charts suggesting we go down before getting that short squeeze, and then we'll have all charts agreeing with each other, the monthly, the weekly, and the daily, and then we'll have divergences popping off the wazoo on all of them, and then boom, there we go. We have the ultimate buy signal on our hands for that short squeeze, and we'll be able to play that. But when that occurs, I'm going to be putting so much freaking money. Well, for me, so much freaking money on Mara, because this is easy money. All right. Like straight up, you run back up here, $5 to 20. All right. You just got a 4x in your money, 300% gain. So you 30,000 turned into 120K. That's what I want to do. All right. And the housing market, guys, it's not going to stay this low forever. All right. I'm not saying it's low right now. But I'm just saying over the next year or two, we're going to most likely see the housing market bottom, and you're going to see everything's going to crash because the demand is going to be gone. But guess who's going to be there? I'm going to be here, and I'm going to buy a sick, nasty house. And I don't know how much money I'll have at the time, but guys, I want to buy a house in cash. I really want all cash. So I got to start bossing up is what I'm getting at. All right. So I need to get that net worth up. I need to, that's my plan. Okay, guys, I don't know when it's going to come, but that's my plan. I want to get to like, say $400,000 or $500,000. Guys, I want to go buy a house. I want to buy a house in cash. All right. So yeah, that's my plan. I just want to, I'm rich. All right. There's my money. There's my security over the next few years. The housing price next 10 years, we'll say that goes up 2-3x. There we go. There's my money. All right. And then obviously on the side, I'll be getting filthy freaking rich with the stock market because of everything that's discussed here on this channel. So all in all, guys, we got to start making boss ass moves so we can do things like this. All right. And maybe you guys are in different situations than I am. Maybe you guys are well off at this point in your life, your career. All right. But I'm not. And these are the moves I'm taking to get to that point, to get to the points that I'm speaking of right now. All right. I'm telling you guys right now, Mara is down in our zone. It has already broken past the low that we saw over there. We got that on Friday. This is where either we're going to come down and fill this gap, and I think this is around where we bottom. Now, given the current market environment, I fully acknowledge that this thing can keep falling. We can even go to $2 to $3. All right, and that's why I'm saying, like, I'm going to start accumulating Mara. So I'm going to buy the first $5,000 of Mara. on Monday, because I think we're going to have the down day. And then I do think we are going to probably head up to FOMC. But either way, I'm going to start accumulating. I'm going to buy $5,000 worth of Mara in that account that's designated tomorrow. And keep in mind, guys, when this is all said and done, guys, I plan on having a lot of my net worth in Mara. All right. And that's like, so not only that account, but I want a lot more in Mara. All right. Because it's easy money in my mind. I'm really going for that stress-free money. That's really all I'm trying to do. I'm trying to have a stress-free money printer. And Mara is it. Mara is straight up it. So yeah, guys, I'm gonna be doing that. And by the time, guys, if we hit 350, I'm gonna go like very, very heavy in Mara at that point. But yeah, I'll keep you guys updated as we go. But it's a weekly update, so I figured I would let you guys know on this channel's one investment that we cover here on the channel. All right, and as you see, we have the weekly bullish divergence going on there, and we also have the daily bullish divergence going there. And I want to point out, last time we so we did this, all right? So last time I think we bottomed here. So let's mark that, or not mark it, but it's the 1st. So July 1st. Where did Bitcoin bottom over here? All right, where did we bottom? On June. So Mara kept falling after Bitcoin bottom. So that is something to note. Well, but either way, guys, I'll keep you guys updated as we go. This is a 30-minute video already, 31 minutes. So I will, I'll say this, all right? With that being said, I will catch you guys in the next video. Hope everybody enjoys the week. Hope everybody makes so much freaking money this week. Hope everybody kills it. That being said, I will catch you guys next video. Peace.